Welcome in, everybody. I know we've got a lot of folks filing in here. We've want to welcome everybody here to our newest edition of Community Capital Live. As people are coming in, as they're joining us, I want to say a big thanks to the guests that we have today. Really excited to take some time today to talk with Leslie Watson from the Northeast Investment Cooperative. Really exciting stuff. We were actually talking off mic a little bit here, and we needed to hold up and save because we got so much good stuff we want to talk about. But first, I want to give us an introduction as to what this is. So, Community Capital Live is a collaboration with a few different organizations. Those organizations being the Main Street Journal, Neighborhood Economics, Impact Alpha, and the Mindful Marketplace show. So this is really designed to have on people who are leading the way when it comes to local and impact investment funds, to share with us their stories, to really understand better the ins and outs of their fund and also the lessons learned along the way, and then create a database for people who are either looking to invest their money, looking to create a similar type of fund that not only gets a return on investment, but gets what Michael talks about in his books, that social return on investment, not just that financial one. So, really excited about today. I do want to introduce we have a shortened panel here today. It's just me and Michael, but Michael Schumann, who is not only the head editor in chief, kind of mastermind of the Main Street Journal, he's also the author of several books, really that I think are the starting place for local investment, for coming from a consumer side, someone who wants to put their money into their local community, not just into Wall Street. And so check out his books. Put Your Money Where Your Life Is being his most recent and most updated, because these things are changing and updating. So Michael, thank you for your time. And Leslie Watson from the Northeast Investment Cooperative. Let's get into it. So good to have you here today. We're glad you're able to join us.
Thank you so much. Glad to be here.
Yeah, so tell us a little bit about Northeast Investment. I know it started, it looks like about 13, 14 years ago here. What was this space that you guys wanted to transform?
Uh, well, I would say that the impetus for the investment co-op was less about a specific space initially and more about kind of a relationship between ownership and community and asset management, the space of the community maybe that we wanted to transform. So if I can just jump back even a few years before that, in my home community of Minneapolis, we have a lot of food co-ops. Minnesota has a lot of food co-ops. When I moved to Northeast Minneapolis in almost 25 years ago now, we didn't have a food co-op in the neighborhood, but there were people working on that. So that was an effort that was underway, which I joined. And we got that store open, and it was successful and was actually an important placemaking moment on our main avenue, Central Avenue, which is kind of grungy, a little bit grungy, but very useful main street that runs up and down our kind of, I would say, uh, you know, modest neighborhood, is maybe a way to put it. So that experience of coming together, starting a food co-op, which had not happened in the US in a number of years, it was kind of the first brand new food co-op in a long time, was kind of I would say a test case for this community being able to cooperate. And not too many years on down the road, some of those us involved in that food co-op, kind of in the wake of the kind of financial devastation of the foreclosure crisis, in time around 2011 is when this was we're looking at the avenue and looking at all the foreclosed properties in the neighborhood. And our food co-op hosted this event that was imagining building a cooperative economy in Northeast Minneapolis. And we invited people to put ideas on the wall and just really to talk about these things. And one of the ideas came from the general manager of our food co-op, who lived next door to a foreclosed duplex, and said, why can we not pool capital and buy some of these vacant duplexes that have been flipped and flipped and flipped again, and actually own them sustainably as community members instead of, through outside investors? And that was a kind of an earworm for me. And maybe a month or two after that, I was at this is a neighborhood, we're all connected. I was at wrestling practice, with my for my then young son, and a guy I knew from the neighborhood said, "Hey, I been thinking about this building on Central Avenue. We kind of want to buy it, but we don't have any money." And somebody said we should talk to the co-op people, and that was this moment of connection where we just sat down while the kids were wrestling and said,
Hmm.
talk that through, and this idea like, well, nobody has any money right now, but what would happen if we pooled our capital into try to buy this movie, so it's this building together. So that's where it kind of all began, and a few of us started meeting to talk that through. So sorry, a long-winded answer, but transforming like the entire economic relationships within the neighborhood based on what a collective experience of what it meant to have a lot of extraction, I think was laid the foundation, or maybe was the spark, was rather the backdrop was experience and cooperation. And then the building that this guy wanted to buy was the actual first place where we stopped to say, could we actually do this? And it was kind of a focal point for our thinking. Didn't end up buying that building, but that's how it all sort of began.
Well, and I actually really love that story because I've been at, I'm sure many of us on here have been at, different events where lots of ideas get thrown up on the wall and, there's all this great, kind of, juicy brain activity going on, but there's not necessarily something that actually comes out of this in the way that it did. So it's really excellent to hear the story of how the idea met the need, at the right time with the right people to actually make that happen. That's great. I know we're going to get into some more technical kind of details about the fund, how it operates. We're going to take some Q&A from the audience here. But you mentioned a couple times the social relationships and that dynamic changing when the economic relationships are changing, when the asset management, when the way that the money is flowing changes. I'm curious just if you have kind of just your thoughts on what you've learned about those changing social relationships in that co-op model.
Well, it's such a great question. I do think that the economic environment was definitely ripe for what happened. But I refuse, and I think we have you probably have interviewed 16 people, in the last 6 months that would offer you evidence, and we all probably could cite a bunch that like even in a booming economy, people want to cooperate and think about different relationships to capital. But for cooperation, and for that cooperative in particular, and for the network of social relationships that came together to have a new idea, and maybe importantly, have the energy and commitment to go through a startup phase of not just a startup of something that where we're treading a familiar path, like a food co-op, believe it or not, there's now a familiar path for that, but the social relationships and really the belief in cooperation, in our case, cooperation, and the need all kind of converging with opportunity was pretty important for that moment. My work now professionally is in cooperatives. I've worked with a lot of different cooperatives, especially food co-ops, on capital campaigns, including like right at this very minute, we're supporting food co-ops who are raising money right now to open stores. And there is definitely many many veins to tap into that are people wanting to invest in something that's an alternative that they can believe in. So that even in this different time that we're in, but kind of trying to distill an answer to your question, I think there was this nexus that happened there that maybe allowed for something new to emerge. But the spirit and the intention takes many forms to think differently about how we can invest in our own neighborhoods.
Yeah, absolutely. And so our mo is the funding then all coming from within the member owners
Yep.
still to this day, and it's continuing on that. I'm curious kind of how you guys see that evolution of that moving forward.
Yeah, it's great. I don't know if any of your folks on today are listening to this, heard your interview last time with the Vermont Real Estate Cooperative, which was
Mhm.
really great to hear. We're probably we're like a few years beyond where they're at in this sense. We actually, I will say this, we started with member capital and outside debt from a community bank was our lender, and that was it. We had one small grant that kind of helped us with a few things, but it wasn't material. So that was our very DIY community-based approach, and it still remains that way. Now, 10 years in, we've actually paid off our primary mortgage on our first building, so that we own free and clear. We have a second building that has a small, modest mortgage still on it, that will, and so that, we're not we're not totally free of debt on our balance sheet, but we have years now of, not just taking member investment to acquire and redevelop along with outside capital, but now paying it off and seeing, of course, the other dynamic, property values in my neighborhood are are so high. So it's been actually very difficult for us to find another project because the expense has just gotten so high with our model of really just staying, within our cooperative. We have about 275 members who have an initial, it's cost $1,000 to join the cooperative. And then we have offered on a couple of, with both of the buildings, we've offered the opportunity for people to invest in non-voting preferred shares. And so we have another, uh,
Hmm.
I would say $200,000 outstanding in non-voting preferred equity, but all internal to the cooperative, along with now just a small amount of debt financing.
Yeah, that's awesome. I want to kick it over now to Michael here. I know you guys were getting into a lot of good discussions here, but I also know we want to make sure we just kind of understand the scope and kind of how the fund works at this day. So yeah, Michael, go ahead and unmute. I'd love to have you jump in here.
Great. Well, let's go back to the beginning of the co-op. So the first building, how much did it cost to buy it?
We bought the building. Of course, there's a complicated story, but I'll give you the simple version. We bought the building for $80,000, which I laugh because it's ridiculous. But caveat, it didn't have its own water service. It had a roof that was failing. It had someone who had a failed used furniture business who was living in the back of the building running an operation where they were acquiring used mattresses from a hotel and like hosing them down and it was really in terrible shape. It had been a companion building, so for many years the building was part of a two building suite, if you will, that was home for many years to a hardware store. My family owned hardware store for 80 years in this community, and then over the last 20 years it had kind of changed hands a couple times and then fallen vacant. So we partnered with a local bike shop that was looking to also define their own place on Central Avenue. We bought the building together. Theirs was in better shape. Their half was in better shape. It had the water service and it had the electric service and all, it was not quite turnkey, but it was definitely closer to usable, less of a shell. So we went in together, but they were actually separate properties. So they bought the bike shop, and then we had the smaller building for this $80,000. It required, a significant amount of investment to put it into service. But that's what we started with.
So you said that now you have 275 members. How many members did you draw in at the very beginning, and how did you get them?
We um, we began with the idea. It was at that time untested. So we knew we needed to establish credibility. So we did a lot of personal networking to kind of do a pitch, basically, and get people interested in the possibility. And we imagined we needed like a core of capital to even be serious about moving forward to the next phase. So we decided kind of arbitrarily that we needed 24 people ready to pledge $1,000. And so that was really how we started back in November of 2011. And you when we decided when we got to 24, that was when we would officially form the co-op, get a board, and really start going after trying to get a property in place. So it took us just a few months, actually. It was in March of 2012 when we had that organizing meeting. We had 35 people come and write $1,000 checks, join the co-op, elected a board, and we made a commitment to people. So this is all my answers are complex like this. It's community organizing, so there's not a simple answer. But we said to people, and we're going to hold your money. We're not going to spend it until we get a purchase agreement. And if we don't get a purchase agreement within 18 months, we're going to actually give you your money back. So we just sort of felt really it was necessary in order to have credibility and for people to trust that we were clear that we knew this was an experiment. So we actually kind of blew our timeline out of the water. We were able to very easily meet that deadline. I was just looking back at the exact date. We signed on the building in December of 2012. And then we finalized the purchase in May of 2013. And we had the building fully in service by 2014. So that was kind of our timeline. So it was 80,000 people. 80 people is what we needed to. We had about 90 people by the time we signed the purchase agreement because we paid cash. And then
Right.
we knew we had to pay and hold and develop more capital and find tenants and do all the things to redevelop that shell. And so by the time we actually concluded the project, we were up to just over 200 members.
Right. So the 200 you needed the 200 members in order to do all the repairs and who were the initial tenants?
We well, one of them one of them's still there. We split the building in two. And we had some criteria. We wanted locally owned, people who connected to the neighborhood, and that would somehow bring some life to the avenue. The avenue is got a lot of life, but it's very as a transportation corridor, and it's not very pedestrian friendly, and yet it's our main street. So that was one of the things that people were really looking for, because there's a lot of at that time in particular, a lot of abandoned building or vacant buildings and marginal businesses along Central Avenue. Again, through like knowing people, I knew a guy that I had gone back to graduate school, met a guy in my program who was trying to start a brewery a few years before. And we kind of got rolling with this investment co-op, and we were looking for tenants, and he came back to me and said, "Hey, our brewery is actually still happening, but we have converted and it's going to be a cooperative brewery. And we'd really like to have a conversation about whether we might be able to be one of your first tenants." So that was Fair State Brewing Cooperative. We'd done a lot of work and talked to a lot of people about potential tenants. So Fair State Brewing Cooperative was one of our first tenants. And then actually our first to sign was, again, someone who came to us through relationship. Somebody knew somebody who was involved in the co-op and knew this baker who'd been baking for farmers markets and wanted a retail space. A very charming and wonderful and talented baker named Aki Berndt, who opened Aki's Bread House, a German bakery. So our first project was we split the building, and our ultimate tenants ended up being Fair State and Aki, and were for 10 years. Aki has been going gangbusters and actually just moved out of the building into a much expanded space with a production facility. So a really amazing success story. So grateful he's still in the neighborhood. And Fair State has now taken over Aki's space and is running a pizza kitchen out of that. So still Aki and Fair State, Aki and Fair State to begin, and still Fair State is really our primary and main tenant for the building.
And has this been a break-even operation, or have you been able to pay your members some kind of return?
Oh, yes, we have been profitable in every single year since the building was in fully in service, but for the year when we developed our second building, a smaller commercial building. The way our co-op is structured is that the people who own those A shares, those $1,000 ownership shares, we don't pay dividends on those, but we do allocate essentially retained earnings to those folks. So if you own an A share in any year where there is net income, the board has flexibility about what to do with that, but the practice has been to allocate that out to the A shares in the form of capital credits. So non-taxable event. It's on the books of the co-op. But as that amount gets closer and closer to the amount of our available smallest preferred share, which is $500, it's set to automatically convert to a non-voting share. So after 10 years in service, I'm member number 4. So my $1,000 is worth about $1,440 at this point, $1,000 for the initial capital, and then basically a 4% return on that over all these years. We probably, the board hasn't made a decision about this, but our other building has been vacant and we actually have it on the market. So we have not been, we're probably not really going to be as profitable. This will be our first year where we're in transition because we're trying to sell that building. So, so it might be an anomaly where we actually aren't allocating retained earnings because we are net income, so we don't have them. But I will say this, been profitable or broken even in every single year since we've been in service.
Right. No, that's great. And forgive a couple of in the weeds questions, but
I
I'm
love them.
always curious in the details of this. So you said that there's members who put in $1,000 and then there are preferred shareholders. Do you have to be a member to be a preferred shareholder?
Yes,
Okay,
you do.
so
It is our get around for securities registration.
yeah,
Because under Minnesota cooperative law, we rely on the federal exemption for when you're totally operating in your own state. And so the interstate exemption from securities registration, so leaving us to need to be in compliance with Minnesota securities law. And in Minnesota has quite an advanced set of cooperative statutes, if I do say so. And one of the things that's really nice is there's a very clear pathway. If someone is a member of a cooperative, you can market a security to them and they live in the state. So they need to live in the state. And if they're a member of the cooperative, then there's a very minor, just a basic, almost a notification registration. There's no, there's nothing you need to do other than to notify the state that you're offering those securities. And so we very much keep it to Minnesota residents who can join the co-op. We limited it that way. We wouldn't have had to have done that. We could have opened up the co-op membership to anybody, but we were very sensitive to the fact that this was something quite new, untested. And so we just didn't even want to mess with any notion that we were offering an investment, because it's more typical in cooperatives for the member share to actually not bear dividends. Absent some state restriction, you are allowed to do that, but it's just really atypical for there to be dividends paid on the initial member capital. So we just said, well, since we think we're going to be doing a form of that, let's just keep it all to Minnesotans. So we are structured so that it can only be Minnesotans, but that isn't required.
and
And
if I'm a
certainly for the
member,
non-voting, yeah.
yeah, so if I'm a member and want to take my capital out, what's the moment that that's possible?
We have again an anomalous year because of just what's going on with the other building, but typically we have maintained quite healthy cash reserves, and so we are able to honor requests. Actually, I say that I think that we have a little bit of a queue, so people make the request. It stays in the queue, and quarterly the board evaluates, does the co-op have sufficient capital to honor the redemption request? And we do have a few larger ones that have been waiting a little bit now. Obviously, if our building sells, that will, free cash, and, again, not to get ahead of a board decision, but that would make that a much easier decision than it has been for the last 12 to 18 months. But typically people can rotate out, and our queue isn't very long for people who are waiting to get out. And we do pay dividends on the non-voting preferred shares as well. 2 to 4% is what those are at. So
Right, great. So one more question, and then we'll kick it to people who are gathered here who I'm sure have other questions as well. So I appreciate that you said that your neighborhood has done very well. And since you started, there's been a lot of gentrification. The properties around you have gotten more expensive, so it's hard to sell. But I assume that, if you scan and elsewhere in the Twin City area, there's plenty of areas that, where the properties might be more affordable and you can, in a way, start all over again. So what are your
oh
expansion
God.
plans?
Well, what's really interesting is that you're right. And actually I'd say there's probably 5 or 6 efforts like this in different neighborhoods throughout the Twin Cities that are doing this very thing, much as, there are now nationwide people doing this in all different kinds of way with all kinds of variation. People who are thinking through solving problems of access, of impact, of scale that we just haven't. We just we're like the test case, and so we're the pilot project, and now people are going beyond, in many ways. So, but to get to your direct question, we did have that conversation, but our I don't, I mean, Northeast Minneapolis is not technically a different part of Minneapolis, but it's Northeast Minneapolis. And it's just
Right.
like, it's a really neighborhood focused, community focused effort. That said, I think that the challenges, and the board has really, really worked hard to try to find another project, and been hamstrung by just a number of factors, not the least of them COVID, the market, capital being tied up in the other building that, maybe wasn't the best investment, and then burnout is real with a volunteer organization, just a lot of things. But they have explored and tried and really thought about it. And I think one of the avenues that is attractive, not yet, nothing that's in the works or anything like that, but certainly under discussion, is what does it look like to really not try to do it all your own, but to find the right partner? So now you have this tool and this mechanism to own things together, but maybe a bunch of volunteers who aren't really like best suited to do property development and property management, but could be a really great partner to co-own together, to bring the community capital to support something else with a nonprofit partner, or whatever that looks like. And so really in some ways, obviously there's a whole other host of legal questions depending on how you begin to move into really more of a fund, which we aren't. I mean, our co-op really owns the real estate. That's what we do. But the more you start to look at it as a mechanism for investment, the more it begins to honestly maybe feel more sustainable for, from the versus the all volunteers all the time for the rest for time immemorial, so I'm giving the longest answers, Michael, but I think that if that was in another part of the community, if that was the right partner, if people could get excited about it, I don't think that it's not like required that we be in Northeast Minneapolis, but there's plenty of opportunities like that in Northeast Minneapolis. Like, it's gentrified, but it's not that gentrified, so yeah.
Yeah. No, but you said something that I did not appreciate, which is that every job within the co-op, the scouting, the improving of capital, the management of it, it's all volunteer. So that's no wonder why burnout is a huge issue. And it would be good to get to the place where one person was getting some kind of compensation for doing this, right?
Yes, I will say this. I should clarify, we don't have any paid like staff or anything like that, but we do pay for professional property management. Like
Mm.
that
Hmm.
was a lesson learned very early on, that you have a startup brewery and a startup bakery trying to make a go of it. They cannot wait 4 weeks to the next board meeting for you to make a decision. I mean, it's just completely unsustainable. So we rapidly learned that lesson, that certain things must be delegated and handled by sometimes committee. We're of a pretty good and robust ability to delegate to committee that is well honed after all these years, but also paid professional management, and then paid bookkeeping and tax preparation. Just like the money and the
Got it.
buildings need people who are getting paid to do that. So
Right. That's helpful. Joel, let's open it up to others.
Yeah, I wanted to also ask quickly too, when it comes to whether it's the brewery or the bike shop or anything too, I'm wondering if you guys were able to get back any data on the, things like, measurements that you like to see, like livable wage, like, any of those other kind of triple bottom line impact. I'm wondering if you have any data or have anything on what was able to be accomplished on that side of things.
yeah, I mean, it's a funny sort of thing. Like, one of the things about not being beholden to philanthropic capital or public capital is that you probably don't do the kind of tracking and reporting that you might otherwise do, because you're kind of just elbows in.
Yeah.
But I will say, and there's a kind of a second half to the story that's really important one to lift up. But I can say this, that where there had been that vacant two building parcel,
Mhm.
with just some soggy mattresses and other
Fascinating business
mold and
model, by the way. I got
mold
to
and
say,
all the
I want to
things,
know what
right?
they're doing to make that work.
Right.
Yeah.
There was probably an investment of about $450,000 maybe, but $1.5 million between everybody, the bike shop, which was their own business, and the brewery and the bake shop and us. And where there had been nothing, 25 jobs were, present. I will say this
Mhm.
though, and Aki has been really successful and has moved on. The brewery, Fair State, this is public, so just to share, it's publicly not available information. They actually, they were very successful and just like caught the wave of the craft brewery moment. Also, they make great beer and they have a great story, and a beautiful tap room. They expanded into a production facility and went into distribution and had some success, but COVID and just kind of challenges in the industry really got them. And they actually went through bankruptcy last year, emerged from Chapter 11 bankruptcy, um, and but did and end up selling their production facility. So they like went way up and really had impact, and now they're back down to the tap room on Central Avenue. Great, it's a community gathering place. Again, they still make great beer, but there's like in some ways it's I wouldn't wish it on any business whatsoever, but I think we look at impact in the moment, and then you do need to we are maybe are that like what does sustainability look like over time, and is impact in the moment, we celebrate it in the moment, and then there's just like the reality of trying to do business in the world, that's going to come for you no matter what. But so
Mhm.
the buildings still look great. They're not vacant. I know the bike shop too, through COVID and everything else, like that's bikes also a challenge after COVID. It's been a challenging business, but they're still there. And so I don't know, it's really tough being a small business owner. But it's still a lot better than soggy mattresses, and people are
Mhm.
drinking great beer and now eating excellent pizza. So
Yeah. Yeah, because I mean, they're going to have those. You're going to have to deal with the competitive market that small businesses have to deal in, regardless of how you were able to, get your funding and your financing there.
yeah, absolutely.
Obviously. Jen had a really good question. Jen, do you want to unmute? I can throw it to you here because I liked this here.
Yeah, sure. Thanks, Joel. And thanks, Leslie and Michael, for having this discussion. Our community started a food co-op about 12 years ago, and now our board is really thinking like, what's next? Do we want to open another location? And I'm trying to instill some other ideas in them. So just, thinking about our capital campaigns that we did and raised all the funding, and then hearing from you, it seems like there's a huge amount of pathways to guide you in doing these kind of cooperative real estate investment cooperative. So just thinking, are other food co-ops that you know of pursuing this as a way to kind of further their mission? I know a lot of co-ops participate in Twin Pines with the Cooperative Community Fund, which kind of whets the appetite of our members, but that's, donation based that the co-op then gets the dividend back, but it's still very much, it's not like our community members can get a return as well. So
Right.
just thinking it's kind of fertile ground for this kind of thinking.
Yeah. Um, well, so I mentioned that I work in cooperatives now. I for many years what that looked like was being a consultant to boards of directors of retail food co-ops, although I'm in a different position now. Um, and so I hear that question, and it's a great one, and I do have an answer. I actually have one example that I'm aware of. But I also know that, and I also mentioned that, one of the partners in getting this whole thing going was actually the GM of our then small, now large, but small and still sort of finding its footing food co-op. Retail food is like an incredibly difficult business. So and my work with retail food co-ops, like, should we start another business on the side, is often met with a lot of anxiety and, kind of night sweats. So I don't know a lot that are saying, well, I don't know any that are saying, let's do this as sort of a project of the food co-op, but the spirit of like, we can cooperate to do things that the food co-op manifests in the community, much like Monadnock, your home co-op that you mentioned, has for sure. The startup energy in particular, like I think you all have been open not quite as long as Eastside, but a lot, but still startup-y, like still have founders hanging around. That energy is something that's really real, and I think that's something you can tap into to do something. And I think food co-ops, particularly ones that have some strength, whether it's strength of leadership or strength, even a little bit of capital, can help to incubate, can convene, can be partners and helping a group think that through. So one where I believe that is happening is in Moscow, Idaho, the Moscow Food Co-op, not the food co-op, but I am aware that there's a real estate investment co-op emerging right now. Like literally, I heard about a meeting that they had last, they're meeting with members, they're getting going, really getting going. And I think that the food co-op, I think that manager is part of that cooperation among cooperatives is really real. So I think that the food co-op as sort of a incubator, as maybe is the best word, is, or I don't want to put that much pressure on any GM of any food co-op as a convener, is a great place. And then of course the members, whether it's startup energy, whether we had a really successful capital campaign in recent years, we understand and have the language already and the fluency and what it looks like to take our capital and invest it cooperatively. Like that is something to be harnessed and looked to. So and that way I think it's fertile. And then again, as I said, Eastside back in the day and Moscow are my two examples I'd hold up where food co-ops have had something to do with the real estate co-op happening.
Fantastic. Thank you.
Mm-hmm.
Yeah, thanks, Jen, and thanks for tying it back to food co-ops. I feel like I know for me, my whole localism journey all began with food and food co-ops, and I think that's pretty common. I think that's a very common thing that people have. Michael, I know I wanted to kick it over to you. I know that you had a few follow-ups that you wanted to get to as well, if we had time.
Yeah, so there's sort of two different directions I wanted to get your thoughts about. So one is that the Twin Cities has just got a real wealth of foundations that exist there. And I'm curious if there have been any foundations who've been interested in doing program-related investment in you or trying to take your work to another level.
Well, what a timely question. So as I mentioned, we did get a grant back in the day from the McKnight Foundation, which is based here, of $25,000. We hustled for it. We had to do some convincing. The then program officer said, I don't know, don't call it a model. We'll invest to help you see if you can do another one, that kind of thing, but that was a welcome investment. Again, as I said, not material for what we did, but helpful. And then a lot of years went by and people started in the Twin Cities, as I mentioned, there's a number working on this. There is a nonprofit called Nexus Community Partners, that has a cooperative development arm, and one of the staff there is really fascinated by real estate co-ops and has been someone to continue to convene conversations and to grow the network of people thinking about this. And as it was actually last fall that the McKnight Foundation, again, they're not doing program related investments, but they are now helping to convene all the people who are kind of working on real estate co-ops or adjacent projects, and there are a number of different versions, to just kind of have almost like an initial conversation, and now it looks like it might almost turn into, I don't know if it's just a practice group or a convening, but so there's maybe enough people and some institutional interest to say that could exist down the road. I'm not sure. I don't have any intel on what McKnight's plans or anything like that. And the other thing I will say too is that we're in a very curious moment to make any predictions about what any foundation will do, because I think that the demands on resources have shifted so abruptly in terms of what priorities are going to be at any given time, just because of what's happening at the federal level around in the Trump administration. So that's always my sobering caveat. But that having been said, I do see at least the McKnight Foundation being supportive of helping people to continue to think it through. And I think, if something came of that, we'll see. But the short answer is no. And the long answer is wish casting.
Yeah. So I mean, my sense is that you have more you've gathered more attention and you have more admirers than you realize. So I did work for several years with the Northwest Area Foundation, helping initially Native American communities, but that was outside of the Twin Cities, but then the Hmong community inside the
Mhm.
Twin Cities. And I think the Hmong community is kind of curious about the model that you have. And that might be an interesting partnership to, and sharing with them all the lessons you have. I'm curious if you had any conversations with them.
No, not specifically. It wouldn't surprise me if the folks at Nexus have. Like, I feel really grateful that someone inside, someone who's in a staff position, has held the interest. They've actually developed some resources. The city of St. Paul has a program now to support shared ownership in different forms, including worker co-ops and real estate co-ops. And some of our, just some of the nonprofits around here are pretty invested in some of that. So I haven't personally, I've had a lot of conversations about the real estate co-op with many people. Most recently, as 2 weeks ago, there's a group from New Orleans that's forming and going to be coming up here for a study tour in September. And we're planning to have a convening and so on. So there's a lot of communities around the country, I agree, that are still interested, still working, doing really good work to advance. And I talked to probably a handful of them. But I think there's just so many more people just doing this work, maybe with even like some staff salaries behind it, who can answer your call
Right.
and answer your email during working hours. That I bet,
Yeah.
you should ask. I would ask Benjamin over at Nexus about that, and he'd probably say yes.
Yeah. Okay. Well, it's a connection that I would love to make happen. The other thing that is a rather common conversation that we have here is that Michigan is very close. We keep saying this, but I do think it's true, very close to passing a income tax credit for local investment.
Mm,
And it's a 50% tax credit up to about $3,000.
mhm.
So what that effectively means is that, for your next round of $1,000 investors,
Right.
um, they immediately get a 50% rate of return. So
Yeah.
I feel like Minnesota would be ripe for this kind of innovation, especially if there's a proof example in
Yeah.
Michigan. And that also is something, I mean, it seems to me, as you explained, public policy is already simpatico, but there's so much more that they could do.
So much more. Yeah, that is a really great. That is a. I mean, the finding, I mean, yeah, as you say, the cooperative statutes are like of much appreciation and gratitude for the fact that this was possible because of how we are structured. Our cooperative statutes are structured. That I think it's not possible in every state to do what we did. And there's so much more. That is a great example. If you look to Canada, one of the early examples we found out after we got going that there was this the Sangudo Opportunity Development Cooperative up in Canada. You may have heard of if you
In
follow the U.S.
Alberta,
stuff.
yeah,
Hmm.
that Alberta has a very unique statute that
Right.
allows for investment co-ops.
Exactly. And allows you, my understanding is to divert some portion of even like retirement savings into,
Yes.
opportunity development cooperatives that meet criteria. It's more regulated as it should be, but of course it's supercharges. That's why these little communities have been able to do like several $1 million investments and whatever, because people don't have to empty out their, sofa cushions to make it happen. And if you make all the proper disclosures and someone's okay with some of their investment netting 4% instead of whatever, fluctuating return you get on the stock market or whatever it is, then fair enough. So yeah, we could be so much more, philanthropic, public policy, so much more that we could do, but we're like I don't know, we're the rudimentary. Again, we're beta here at the Northeast Investment Co-op.
Right, right. Well, soon you're going to be Delta, so that's why we
Maybe.
need to keep the pedal on the metal with
So,
this. All right, back to you, uh, at the top.
Yeah, well, I'm really grateful we got to have you on today. I think we, like you said, with the Vermont Real Estate Cooperative, with what you guys are doing, I think it's always cool when we get to see a fund doing impact work. But to me, it's doubly cool when we get to see it set up in a way that's democratic, that where the money's coming for the most part from within. Or if, it's not, it's at least a decision that's being made democratically from within. And so I just really get to especially love getting to have these kind of conversations where we can talk both about the impact fund, but also about that cooperative model together. We do have one more question coming in here from Seth. Seth, I can read it here for you unless you want to unmute. I'll give you just a couple seconds to do that. Otherwise, I'll go ahead and read it for you here.
No, that's fine.
Yeah,
Go ahead and read it, and I'll add color commentary if need be.
great. So Seth said, he said he would love more info about real estate investing co-ops. So he said he's working with the California Department of Conservation on agricultural land conservation, and could use a co-op to hold land free, simple, with a state funded conservation easements to offset investment.
Well, great. So I would say, I mean, I don't know the details, but real estate investment co-ops of some fashion are certainly possible in California. And so my reference I would offer is the East Bay Permanent Real Estate Cooperative, which has aggregated capital and I think done it with partners and is building limited equity, like affordable housing opportunities using some fashion of a real estate investment co-op. So not knowing anything about California law, that would be that's the one that I know of that's exists, and there surely are others. I will say it's a great question, and as much as I'm bragging about Minnesota, it's like the one thing we actually couldn't do here in Minnesota. There is a restriction on cooperatives owning agricultural land, as I understand it, and it's actually a protective measure to keep like giant corporations from buying up land, but it happens that the way that it's structured, co-ops are caught in that kind of multi-owner prohibition on certain kinds of ag land holding. So I know that the Hmong farmers who have been farming together for a long time have found a creative solution to that here in Minnesota. So like every state is its own co-op animal, and every opportunity has to find its way to wedge inside of what is possible inside your state. And even my beloved Minnesota could use both an income tax credit and some work on that particular aspect. But it is certainly a problem or an issue that folks have been thinking about. Now, as I am talking, I realize I believe there was an effort, and maybe it's probably still underway in Colorado, to do that very thing, to have a cooperative to hold land for preservation for agricultural purposes. And Michael maybe well be aware of others.
Yeah, is there anything you can think of, Michael, that falls in line with that?
I don't know of specific examples, but yeah, I mean, to me, a lot of this still can be accomplished within existing law in a lot of states, and it hasn't been thoroughly exploited. But yeah, if you can create an expedited path with another statutory structure, that's helpful.
Land trust is a great, like the first place usually people go to if they're not co-op, if co-op isn't right, land trust is just one example that, people look to.
Yeah, I just heard at a class that I taught this weekend, we had a guy named Kurt Lyon from Transition Finance talk about different models of ownership, and he is like Noah of Noah's Ark. He collects two of every model conceivable around the world, and I would expect he might have some ideas here.
We should get him on.
We should.
Let me know
I
when he
agree.
comes on.
Yeah.
Yeah.
Well, thank you so much for your time, Leslie. I know I learned a lot. I think everyone on here did. I think it's great to see just another example of people with a good idea, seeing the need, just getting together and pooling their own resources to get it done. And we absolutely love to see that. Make sure to tune back in a couple of weeks here for the next episode of Community Capital Live. Make sure you also, we have tons of back episodes now with lots of great guests that we've had over the last year or so. We're coming up on a year almost from when we started this. I remember we first started talking about this and announced it at the Neighborhood Economics in late February of last year. And so it's fun to see us hit kind of about our year anniversary roughly here. So check out on the Main Street Journal all of those previous ones and join us for the next one coming up with the Northwest. We've covered the Northeast, so now we're going Northwest, but we're going to Pennsylvania, which is East. I'm confused, but we're looking at the Northwest Pennsylvania Investment Cooperative, another investment co-op coming up here in a couple weeks. So join us then. Tell other people apparently we're the best kept secret in the world on this show. So let's stop it and let's be a not kept secret anymore. Thanks everybody for joining. See you next time, and remember, we are each other.
Thank you.